And we are back looking at US 30 again. You may be saying, I am so tired of this US 30, but US 30 pays the bills. Let me tell you that for sure. Okay, you see three zone areas here. These are key levels, sensitive areas of support and resistance. And notice how price has reacted to these levels. We are now approaching a level. Notice on my Fibonacci here, I have the 27, but I also put in a 10. It's called my 1027 method. So if price breaks above this 10 here, we will be continuing to the upside. But if I start to see rejection in this area, we will start to see some downward movement. So as we approach this area, I'm going to be looking at it very carefully. It is 12:20 p.m. Eastern Standard Time. So I was trying to do like a live stream and just let it play out and do a live trade with you guys here. As you can see, I definitely am in profit here. This is on TradingView, paper trading. So it's not my live account, although I wasn't a live account taking this buy trade and made a significant amount of money. I think I showed for my last video, I probably entered somewhere up in here, and as the night went on, I was sleeping, it came down and came back up. I didn't have a stop loss on this particular trade. Once I saw what I saw, actually when I got in live, um, I woke up this morning pre-New York session, I got in right around here once price dropped down below these 3 wicks. And just another nugget I want to share with you guys as well in reference to entries. If you see 3 wick rejection somewhere, look for a reversal. And so the reason why I was able to get in here in this area here without really any typical analysis besides the fact that we came down into a zone and was going to make a double bottom. I looked over, I counted 1, I counted 2, and then I realized when I started seeing the rejection that this was going to be a buy signal. So I got in somewhere, I think right around in here actually. And then I rode all the way up. I think it was probably until this area right up in here. I can look at my on my phone to see, but we still are pushing up. So what I'm looking for, of course, again, my bias is still 29,800, 29,750, probably the 3,000 mark, 30,000 mark rather. Um, and let's just see what it does for the rest of this week. If we break above this 10 Fibonacci level, we're definitely going to see some rise, and we still are pushing up pretty strongly here. We may get a nice pullback. I'm always looking for pullbacks. A pullback for me personally would have to be more than one candle. So you see here, you have 2 candles here, really 3 candles here. So this is what I would call a pullback here. When I'm looking at this right here, I wouldn't really consider that to be a pullback. So just a little bit of nugget for you to think about when you're looking at the market itself. So again, we're still moving up into this supply zone. Once we was in the supply zone, we see that it pushed down. We're coming back in to see if it's going to still hold as resistance. And let's see what happens. This is the 1 hour time frame. Let's go to the 4 hour and see what we find here. 4 hour, we came down, higher high, higher low, higher high, made a higher low. So we're looking to push up. Let's see, do I even have I don't even have my quarter points up on there either. But let's just put a 29 psych level here. Let's see. So you go to coordinates, 29,000, and I like to lock mine in so that way it doesn't move right there. So most likely because the previous was 28,750, which is, let's see, put another one right here, and 28,750 psych number. This of course would be blue. There we go. Okay, and look at this. This 28,750. Let's go back down to the 1 hour time frame. Let's move this out of the way. We're going to reset this, bring it back over. This 28,750 lines up perfectly with this zone, also with my reversal at the 10 of my Fibonacci. So this is going to be a very strong area of resistance. It's a Fibonacci, well, I wouldn't say Fibonacci cluster, but we have three areas which shows that there's going to be some type of reaction um, up in this area. So let's go down to the 15 minutes and see what we're doing here. So when you go down to a lower time frame, what you want to look for is breaking structure or some type of indication that there is a signal that is going to continue higher or lower. So when I say a break in structure, let's look at this situation here. So we have the 27,750. We see price has come up to it. You've been watching it. It comes up and actually breaks it. But then as you see, it comes up and makes another higher low. But then you see some momentum loss here. So instead of making a higher high, it makes a lower high, then a higher low, and then it makes another lower high, and then it drops off. Always what I tell people when people ask me in reference to price action, what I'm looking for is you want to see what the market's beginning to tell you. And I like to say that there's usually three reversal patterns or three indications within this consolidation area, which is going to tell you what exactly is that price is going to do. So here's my consolidation area. Let's just make this yellow. Let's move this over here. Okay, this is my consolidation area. So we come down, we've come up, we've come down, we made a higher low, but then we made a lower high, and there's a reversal pattern, a selling reversal pattern, a bearish reversal pattern. Then we come back, we have a level of support. See the bulls still trying to come up in, and then we have another reversal pattern, a bearish reversal pattern, selling reversal pattern. So that's two. So you have one, you have two. We have this this strong bearish candle here, which shows that the bears have entered the market. We have this candle here, which shows that even though this is a Marabuzu, I believe that's how it's pronounced, um, we have that strong bullish candle, but there's no follow-up candle after that. It actually stops, and then we have a bearish candle, and then we have a strong bearish candle here. So with this information, the bulls have not the bulls, I'm sorry, the bears have entered the market. Then we have one reversal pattern, then we have two reversal patterns, and then we have a bearish engulfing. So you have three indications that the bears are in the market and that this is where the price wants to go. It wants to go down. So that from that perspective, as you can see here, we have this level of support that was plotted out. Once it breaks, then you can enter the trade. Personally, for me, I would not wait once it breaks because I'm more of an aggressive trader. Once I see these indications that it's bulls, you can enter your sell here and just kind of wait. You would have waited 15 minutes more. What is this? 15:30 hour, 2 hour, 2.5 hours before it actually broke down. Or you could have waited for the second pattern and then taken it, and then you would have gotten in, been in profit in 30 minutes. And then you see what happens. You had a nice drop from this point all the way down. And let's see how many pips that would have been if you would have gotten in here all the way down. Let's say right there, close right there. 402 points, which is actually 40 pips, which is actually quite phenomenal for one standard lot. That's 400. For 10 lots, that's 4,000. So what a beautiful thing is with US30, the reason why I trade it, because I use my broker's LMFX. The spread is about 0.2. So therefore, if I put 10 lots on, I'm probably in drawdown of $20 for 10 lots. So it's almost basically like an ECN account. Great broker. And I mean, 40 points, 10 lots, that's $4,000. So you can't beat that. That's all I'm going to say in reference to that. But that's how we look at areas of this here. So when you're above a psychological level, quarter point 28,750, and once you see what's above it is creating an M situation, letting you know that above a psychological level, the pattern that's being created showing me that it's going to break back below. And if this was below a psychological level, let's say, let me find another one, 28.5. I think that's probably right here. Let me just plot that on. I don't think I have it on here. Sometimes I take it off. Okay, 28,500. Okay, there we go. Okay, so you see that this psych level here, so 28.5 what happens is as it's trading below, it's not really dropping really low. It's dropping and it's come back up to it, then it's dropping. So that's more of a double bottom, a W formation that's forming. And as you can see, what happens is it shoots back up above it, but then it shoots back down. So and then it continues to shoot up, as you can see. So when you see price below a psychological level, trading and showing market patterns like this, a double pattern, you have divergence right here. It's giving you a signal that price is more than likely going to go up. Now we do have that it did come down and drop down to actually another psychological level here. It's probably 28,250. If I plot that down, that'd be somewhere like around. Let me just go down here, right, somewhere right in here. And pricing moves from these psychological levels, this quarter points, as we went through before in my other videos. So knowing that prices come up, so now we're coming up to another psychological area, and we want to see what's going to happen. So we see some nice little bit of rejection here. We're on the 15-minute time frame. Could he be creating a double top? Let's see. I looked at a video today, had an interesting way of confirming the double top. So really, once if price stays within this area from the close of this candle to the close of the wick, which is not much, and we have a bearish candle, we can just take this trade for a sell down. Now I am currently in a sell on this particular trade, and let's just see what actually happens in reference to this coming down. A nice retracement we'll have, and then of course my bias is still very bullish to my 29,750, 3,000, 30,000 take profit area. So hopefully this was something that could help you out in reference to see where we are in the market in reference to US 30. Please comment below. If you have any questions or concerns, entries, please feel free to comment, and let's just see what this does. I'm hoping that these videos that I'm posting up, anybody interested in trading the indices, you'll be able to follow the market, learn how US 30 actually moves in reference to price, and then enter and take trades at key levels, and really let this be one of the main pairs that you trade. For me personally, I've been trading this gram. I'm actually trading GU as well, because the market is kind of slow right now with US 30. But between 1 to 3 pairs, all you really need to trade. You follow them, you marry them, as people say, so that way you learn how they move, and then you enter the market and you just make your bag. You secure the bag, you make your pips, you make your money. Sitting back and trading 28 pairs and just going through all the pairs, that's all well and good. But if you want to make consistent money, this is where you need to be. As you can see now, we have this nice wick formation. Let's go back to the 15 minutes and see what's going on. So look at that. So we have a nice bearish candle. So you just close out the buy. It's a nice profit right there. And just take a look at my balance for paper trading alone. I started this account with 100,000. Now I'm up to 1,768,948,948,017 dollars. So I've taken $100,000 account to over $1 billion. And yes, okay, so it's not a live account. That doesn't make a difference. The trading is trading, whether you're trading on a live account or a demo account. Now, psychologically, of course, it will be different when you're trading live for various factors. But right now, if you're not concerned with the money, it's not about the money. For me, it's about the skill. The skill is the primary focus, and the money is the byproduct of the skill. So once you understand and you are trying to master the skill and master the entries, it doesn't make a difference what method you're trading. I don't believe in that there's a holy grail of a method. Everyone's method is pretty much based off their own personality, and I certainly believe that you can trade multiple methods. I know many methods of trading, and I trade multiple methods because sometimes I get bored with trading one method. I try different things, and there's nothing wrong with that. Just being consistent and being profitable, that is really the key. And hopefully, most people that's listening to this would be able to come to appreciate that. You want to be at a key level. Once you get to the key level of support and resistance, that right now we're coming to a key level of resistance. We've already entered into the zone. We've sought resistance at the psychological level, and we have printed. Hopefully, it will print a bearish candle, and this will be for me a single signal saying that I can enter into a sell. Currently, I am in a sell. I did get in a little bit too late, so therefore I did experience some drawdown. But as we can see, we're starting to push down. If I look at my phone and see where we are in reference to that, I can actually tell you what's going on. So yes, I'm coming down, and hopefully by tomorrow, I'll wake up in the morning on London session, I'll be in some nice profit. If I close below this 27, this is going to be great because I'll have some nice retracement and I can get out and wait for the sell, which probably may happen in the New York session. But anyway, I don't want to make this video too long. I just hope you got some nuggets out of it, and hopefully you'll be able to follow along with what's going on with US 30. You can clearly see we're still in an uptrend. What we have right here, let me just mark this out. We have a higher high. Let's pick that up. We have a higher high right here. Then we have the higher low. As you can see, and then we made a higher high here, then a higher low, then a higher high, then a higher low, then we made a higher high, and then we broke this higher low. We created a lower low, and then we actually retested this area, and now if we come down, we will be creating a lower high. Now if we make a higher low, let's see if we break past this previous higher high, we can make another higher low. But if we make another higher high, most likely it's going to push past this area. So it's really a waiting game, especially when you have your own bias. You know that it's going to go, or you feel that it's going to go in a certain direction. It's more about waiting and having the confidence that your bias is correct, but also having the flexibility and the adaptability and going with the market, even though your bias is bullish, but knowing that you can take a sell trade and still capture an amount of pips while you're in a counter trend trade, but understanding what the trend actually is. Because let's just draw a trend line from this point here, this previous high low right there. So really, once this trend line is broken, then we can probably say that we're going to be heading down for a downtrend. But once it stays, as long as it stays above that, we're going to be in an uptrend. And so they're principles, fundamental truths that stand the test of time. So understanding the principle that there's broadness, there's variables, and there's extenuating circumstances. Well, as long as you're within the framework of the principles, understanding the direction you need to be in. So within the framework of this principle here, we are always taking buys. And if you are going to take a sell, just recognize that it is a counter trend trade. You're not going to capture as much pips as you would if you was going to take a buy. So just be very aware of that and don't be greedy, because that's how you blow your account. I would know. I've done it many times. So I've learned. But anyway, until next time, I hope you enjoyed this video. Please post your comments. If you have any questions, or if you have any own bias as to where you think that this is going to go, or something different than what I'm saying, I would love to hear it. I like to have conversations, and let's chart together, because it's all about sharing and helping each other grow. And this is all. There's no courses. This is all free information that you can learn online and so forth. And it's people, we see the market differently. Sometimes we see the same things, and when we get together and we discuss them, this is how we can help each other grow and maybe see some things and help each other out. So I hope you enjoyed this video. Until the next time, deuces.